Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market has continued to balance in a narrow range, and heading into the open, we have key support at 60 to 62.5, which marks the recent balance breakout area. And as long as buyers can hold ES above initial support, they can still maintain short-term control, and from there, we would still have potential to head higher into the previous close, the previous VPOC. We have the balance area high volume node at 68, and then the initial resistance zone at 68.5 to 70.5. Now, in order to put in a sustainable breakout beyond 68.5 to 70.5, we would want to see broad market strength, some decent upside momentum, and ideally the other markets also participating in the upside movement. As long as we're seeing those bullish conditions in real time, we could break above initial resistance into 72.5 and 75 quarter, 77 quarter, which marks the all-time high, and that's another spot where responsive sellers can be active on first test. On the downside, in order to get a sustainable breakdown below 60 to 62.5, we would have to see broad market weakness, sustained downside momentum, and downside participation in the other markets. If the market attempts a breakdown below 60 to 62.5, as long as those bearish conditions are present in real time, we could then head lower into 53.75 to 55.75 and the 50 to 52 zone, and then we have the larger time frame high volume node at 25.49. Now we would have to see a lot of weakness in real time in order for the market to put in a sustainable breakdown below 60, and even then responsive buyers can still be active on first test of the support areas below, especially at 49 and 50 to 52. So the only time that we would be cautious on taking long setups at the support zones below is if in real time we were seeing signs of a trend down day. So if we're seeing trend down conditions where the AD line is extremely negative and pegged at minus 1500 to 2000, and the tick is completely below zero and printing some significant downside values, and the other markets are breaking down in a bigger way, then we'll need to be careful at the 53.75 to 55.75 area. But the 49 HVN and 50 to 52 is still a fairly high probability area for responsive buyers to step in. And then below that, we have some decent support at 42 quarter to 44 quarter. So heading into the open today, the main question is whether the buy side can hold ES above 60 to 62.5. That zone is essentially going to serve as the bull bear zone today. As long as the market's holding above it, we could still return back up towards the 68 high volume node and test 68.5 to 70.5 and possibly even higher. But if we fail and break down below 60 to 62.5, then the sell side would become more dominant short term, and that could lead to a test of the support areas below. So those are the main thoughts heading into the open. Let's see how the market responds to 60 to 62.5, and we'll take it from there.